Well, thank you. Just we are entering the lunch section, so I like to give you some food for thought about the challenges not only in this market but in general the insurance market. And listening very carefully to the previous speakers, I've made a short summary of the state of the nation in Romania, in the insurance market, especially the motor insurance market. You're facing with a lower insurance premium, decreasing Casco insurance, increasing your ratios, your operational ratios, increasing claims cost, plus claim settlements, more involvement from the regulator related to Solvency II, of course. And then also we heard about the presentation from BAR, that they increase the contribution from the members with 2%, which bottom line decreases your profitability. And perhaps you saw from 0 in 2014 now to 2% in 2016. Well, you never know what lies ahead of you. So this is the state of the union, or the state of the nation of Romania, of the insurance market. And let me tell you, there are more challenges ahead of us. But also there are good solutions, and they are coming from the technology. What I would like to do with you in the next couple of minutes is to take you on a tour what's going on globally and to see some kind of relevance between one sector to another sector. What I'm going to tell is absolutely not the truth, but it's my perception of what could happen and what we'll see in the coming years. So don't hold me against it if you see it differently. Probably you recognize these two pictures. From two different cities. Anyone who remembers this city? Well, that is Davos. And as you know, in Davos, annually there's a big global world conference taking place where world leaders discuss about the future of their economies. Well, probably this picture you remember? Anyone? Well, that's Brasov by night. So what do they two have in common? That we're talking about the future of our insurance market, motor insurance market, which was also a topic at Davos, and they called it the mastering the fourth industrial revolution, because that's the area we have entered this age. So the Internet of Things, or what it's called, have revolutionized many traditional markets, where we saw that some traditional markets have been disrupted. Some old brands just disappeared by the fact that new companies entered to the market, and the traditional companies were not able to adapt to the situations. We have seen already in our market that in different European markets, several European insurance companies cease to underwrite risk due to the fact that they are not able to cope anymore with the challenges. And that has to do with regulations, and that has to do with capital requirements, and that has to do with customer demands. Here I just showed you several examples of travel agencies. In many countries in the past, you went to a local travel agency where they would book your travel for you, your train ticket, your flight ticket, your hotel accommodation, perhaps your car. Well, this is all what we do today on the internet. I saw here during the presentation, everyone is using his smartphone to be connected with the home front, to be connected with the resources it needs. So we book online an hotel, we book online an apartment, Airbnb. The same counts for the music industry. Now we have brands like Spotify and others who are providing music for free. And let me tell you a personal story that I encountered myself. In 2002, I did an e-commerce strategy at the Erasmus University, and one of our assignments was to produce a new business plan for a retail concept, which at that time in 2002 had 280 retail shops across the Benelux, and which was market leader on music and games. And in 2002, so keep in mind what we are talking about, in 2002 we foresaw as a project team that somewhere in the future you could go with a disc to a shop and brand your own music on that CD. That is what we thought in 2002 would be the future of the music. Now we know it's differently. Disc doesn't exist anymore. Everything is now in the cloud and comes through Spotify and other channels. Remember when we presented that business case and we said, well, this will be the disruptors coming into your market. He said, well, boys and girls, to position himself as the CEO of the company, I'm in the music and entertainment industry now for the last 20 years. I know what the future of the music industry will be. This will never happen, what you're predicting now. This will never happen. Guess what? 6 years later, the company was bankrupt. Why? It didn't have any possibility to adapt to the new situation. It didn't listen to its customers. It didn't listen and look to what in the market. 200 retail shops closed in the Benelux. Over 4,000 people lost their jobs. So did he foresaw the future? Well, apparently he foresaw a different future, but not the future of the music industry. I will not go in all the examples, but here you will see some of the well-known brands that are entering into in existing markets and are disrupting some of those big markets. Well, a big challenge, of course, is with Uber and Lyft, where you can car share riding. You book a car online via an app, and it's disrupting the traditional markets. They're facing enormous challenges with regards to legislation in certain markets. But now, last week, Ford announced to inject $500 million in Lyft, another car share riding system. So also those big brands believe that these kind of developments will lead into the future. And in the digital disruption is already happening. And what you see in all those brands I'm showing here from Uber and Skype and Facebook and Google and Cees is that there's a commonality between all those companies in their market, is they don't possess any assets anymore. The assets are with someone else, and they facilitate through their technology the use at a very low cost and a very efficient operating modus. And that is what all those the companies have in commonality. And there will probably be more in the future. We will see. What I'm going to show you now is an example of a CEO of a big company, a global company, when the smartphone of Apple arrived in the market and what he thought about it. Can you start, please, the first video?
Steve, let me ask you about the iPhone and the Zoom, if I may. The Zoom is getting some traction, and Steve Jobs goes to Macworld and he pulls out this iPhone. What was your first reaction when you saw that?
$500 fully subsidized with a plan? I said, that is the most expensive phone in the world, and it doesn't appeal to business customers because it doesn't have a keyboard, which makes it not a very good email machine. Now, it may sell very well.
So what you saw in 2006, Steve Ballmer, leading Microsoft as the CEO, said an iPhone, $500, which doesn't have a keyboard, it will never work. No one is going to buy a $500 device. Well, today we know that Apple is one of the leading brands globally. So again, an example of a CEO who was not able to adapt to the situation and didn't saw what was coming ahead of him. He said, this will never work. So, and as we know in our industry, I'm working now for more than 10 years internationally in the insurance market in Europe, our market is very traditional. It's conservative. We don't want to change. We like to keep things as it is. People adapt to wars, people adapt to diseases, but not to change. That is the worst nightmare we can encounter, changing in our business model. But if we don't change, if we don't adapt, we will be out of business tomorrow. So this is, I think, clear examples which have shown that. This is a research by Boston Consulting Group done last year. They interviewed globally more than 15,000 consumers, and they asked them about what is your customer experience with regards to all kind of service and products. And what you see here is that the highest customer satisfaction is now with the banks. We are positioned at the lowest end. So we are, let's say, somewhere at the car sailors and other kind of occupations. At least it shows that our customer satisfaction by our clients is perceived as a very low level. If we look further into that life cycle chain of the insurance market, and then you see also significant differences. And it appears that, well, most of the people now tend to find online an insurance product. There are aggregators in the market. You can compare products, you can compare pricing, you can compare conditions. That goes very well. But the further it goes into the satisfaction level of the acquisition stage, the lower it gets. And the lowest part of the client satisfaction is on the claim side. Because there still we act according to the traditional levels and we don't, again, there want to change. Of course, there are reasons to explain for it. We're talking about a lot of legacy IT systems in our market due to acquisitions. But there's also, for many CEOs, and that has been a research which has been recently done by Ernst & Young, that there's a limited innovation focus on the current CEO positions within the insurance market. So in the combination of that, that you will see back in this result as being presented by Boston Consultancy Group. But of course, as I said, the technology is coming into our systems, coming into our industry, coming into our market. I will briefly comment on some of the telematics developments later on. This research also comes from the Boston Consultancy Group. It's a public information. So if you go in on the internet, you look for Boston Consultancy Group insurance trends worldwide, you will find all the results there. And I took two out. That is the home insurance market and the motor insurance market. And what they see is, and what they predict, due to increasing technology usage with connected meters on electricity, water leakage, fire, and theft, you're able to increase your ratios with 40 to 60% on your home insurance market. And the same for motor, you'll be able to increase your ratios with 15 to 25%. So technology should be an enormous driver for the insurance market to increase and back to profitability. It's not something you have to invent the wheel yourself, because the technology is already there. You only have to adopt it and incorporate it into your organizations. And here you see that due to the impact of the value chain, is that especially where it consults on the claim side, that is where the big numbers can make the difference. As said, it's a report from Boston Consultancy Group. I think it has over 150 pages, so you can digest it yourself. But we see also that in different insurance companies, not only from the traditional insurance companies, so we'll give you an example later on, but of course there's also a lot of new insurance companies entering our market. It was only last week that it was announced that there's a new insurance initiative started, which is being backed by Suncorp from Australia, and AIG and AXA will start developing insurance product where you buy an insurance product for your assets during a certain period. So for example, you want to go on a biking tour with your friends and you want to insure your bike for 3 days. You just swipe on and swipe off your coverage. This is being launched in the US. They've raised more than $70 million to launch this platform. They will do it in the US. AXA will launch it next year in the UK. So these are the new players that will come to the market and will come with a completely different business model, but they have listened very carefully to the market and to the consumers. I don't know if you are familiar, but last year also, and I'm mentioning it here down there, is that Google entered the insurance arena. Having announced to sell as an aggregator to offer motor insurance online. So they developed a platform. It was for their customers quite easy to register themselves and to submit a quote from over 145 different insurance carriers. They received the quote within 20 seconds. So they could pick and choose the product whatever they want. It was a nationwide insurance network. Unfortunately, they stopped in March this year due to several reasons. But as you know, Google, they will come back with an advanced and a new initiative, with a new platform, which will make them success. They use this as a trial to learn and how the consumers will interact on that. But we will see. I told you that also some of the existing large players are now starting to invest in technology and looking to be a disruptor. This was announced last month, AIG invested in a company which is called Human Condition Safety. And what it does, it produces safety vests for the construction area and industrial area. And it has all kinds of technology sensors attached to the vest and in the helmet. And with that, they are able to track and trace the employee on the spot. Is he still moving? Is there no accident involved? Based on that data they receive, they're able to improve their underwriting. So you see that also the traditional insurance players are investing in this kind of technology disruption that will come to the market, and I think that's a good sign. Well, probably this is what you remember. This is what we do traditionally. Of course, not in your insurance company. You do it completely differently. But I've reviewed over 600 insurance companies in Europe. 99% is still working like this. Not in Romania, but outside of Romania. So what it happens, it's notifying a claim, it calls to its agent, it calls to his insurance company, a claim is being opened, there's an estimation, there's an authorization, a settlement, billing and a recourse perhaps. In average, this takes 3 to 6 weeks. And I will tell you an example out of my own history. I had a small car insurance damage to my car. I hit a small fence. And I went to see the garage and he said, well, the repair will be approximately 400 euros. So I reported the claim because I have a Casco insurance on my car. I reported the claim to the insurance companies. And he said, okay, we will send you a claims form. I said, but now I'm reporting my claim. No. We're sending you a claims form. So I received at home, after 3 days, a claims form, filled it in, sent it back, and I didn't hear anything from it. So I said, well, normally now something should happen. They give me authorization to go have it repaired, or perhaps they will send a surveyor for 400 euros. And so after the end of the week, I called the insurance company and said, what's happening with my claim? Yeah, well, sorry, you forgot to fill in question number 8. So we have sent it back. I said, okay. When has that happened? Well, it's in the process, it's in the post office, and you will receive it probably in the next couple of days. Apparently something went wrong. I never received that claim form. So I called again and said, well, probably we lost it somewhere in our building. We will send you a new one. In the meantime, 3 weeks expired. Finally, when I filled out everything, sent it back, after 1 week I was called by a surveyor. And he said, well, we're going to assess your damage. I said, yeah, my damage is already being repaired. You don't think I'm going to drive with the damage for 4 weeks? I've already settled it. Yeah, but we have to survey your damage. I said, yeah, you should have come the second day, not 4 weeks after it. He said, okay, well, we will come anyway. Okay, I don't know what you're coming to do, but probably this is the typical case in the Netherlands, of course. And so he came, well, there was nothing to see, it was repaired, sent the invoice to him, and finally the claim, after 6 weeks, I received back my money. This type of claims procedure you will see in any given insurance companies all across Europe. This is today practice, and this needs to change. This should be settled within 3 to 6 days maximum, and that can be done because it's a very straight-through processing type of a claim with the current technology. I just gave you two examples. Well, Google Compare we already discussed of digital solutions. This is when you want to buy a product. And this is a company which is called Fixico. And that's a Dutch initiative by coincidence. And what it does, when you have a damage to your car, you make 6 pictures of your car and you send it online. It's actually an online auction. And you receive back quotes from 80 different repair shops. And you can select the time to go there, the availability, the price, and all kind of other criteria. This is current technology. You are easy to incorporate it in your claims process and will speed up your process immediately. Because here, with this availability, you know that your car can be repaired the next day. And you don't have to wait for 6 weeks. So it's a small item, it's an application on the smartphone. You can download it and you can see it yourself. So, given the situation that when Google entered into the arena and said, well, within 3 steps you should be able to submit a quote online from 145 different insurance carriers, we designed a similar kind of approach. And talking with your friends and your family about having a claim, they always said it's difficult, it's time-consuming, and it's complicated. We as professionals think, well, that should be differently, and it is differently, but the consumers, the clients think that way. So what we've done, we designed a procedure that in 3 steps online you can register your claim. Wherever you are, online, and automatically the insurance carrier will receive the confirmation of the first notification of loss. Automatically, online, digital. And it adds, at the platform, it adds all the different stakeholders in the process, so the carriers, the agents, the brokers that could be involved, loss adjusters, inspectors, and even repair networks or garages. So how does it look like? It's called the iReport. It's an online tool. We launched it last Friday, so we'll issue the press release today. So first of all, the customer has to register. It goes very easily. There's an auto fill in with all kind of other social media connections. Once you have registered the claim, you submit your claim. If it's a property, a casualty, or a motor insurance claim, once that has completed, you select your insurance carrier and your policy form. And automatically the system is connected to all the 1,600 motor insurance in Europe and will automatically send an email to the relevant auto insurance. And then the insurer can choose what he wants to do himself. Or he will call the client and we'll send you a paper form. And we go back in the normal routine because we don't like to change. And it takes up to 6 weeks. Or you use the application, which is there online. It is being built. It's an open source structure, so very easy to access. Well, we'll leave this. Probably, I don't know if the presentations will be online, but this is about our organization and who we are, what we do. If you're interested, go to our website, and then you can find more information. You're not able to do everything yourself, like anyone. So you have to cooperate within the market. The insurance companies, the regulators, the brokers, the TPA, they have to team up together and to make, again, the market profitable and sustainable. And what you see on technology is that there are all kinds of different partners. This is a telematics provider from Italy. It's providing usage-based insurance products based on driver behavior. And this technology is being foreseen as one of the big disruptors in the market. In 2020, they expect that there are more than 140 million people who are using telematics device in their car to be connected with it. Of course, there are costs related to that. If you want, as an insurance carrier, to start with a telematics solution, you said, okay, but there's the investment. So where should be the reduction of the cost? If you're able to reduce your cost between 30 to 20%, then it's becoming profitable in order to increase and improve your underwriting. I don't know if you have seen about this initiative. It's called Amazon Home Services. So when you buy a product online at Amazon, you're able, once you go to the payment procedure, Amazon will say, do you need home services? That means that a technician or someone else will come to your office and to install, for example, your lamp. So they're combining the product with the service in one application, and that's Amazon Home Service. So think about making this kind of connections. If you are a property insurance carrier and you have a property claim, a household claim on the water side or theft, and your customer is entitled to be covered by his policy, and he buys online an Amazon product, including the service, that's customer-centric. And as an insurance carrier, you're able to connect with these kind of partnerships. The last, and we will see that entering in the market in the coming years, that's a company called Avest Agro. They develop special drone solutions. And of course, with the drones, you can look on the underwriting side, but also on the claims management side. We talked yesterday about the NatCat program. You can imagine that when there's a big NatCat here in this area, and a large part of the country is contaminated or by landslide or by water or an earthquake, and you said, yeah, well, we need to send in the loss adjusters, but the area is completely closed due to the danger. You cannot go in. There the drones can play a role. They will scan the whole area and they will make the pictures and the movies in order for the underwriters to say this and this we should do. There was another question yesterday about how many insurers have a good NatCat risk strategy in place. I think a few. And they made the model yesterday about 1977. Then you're talking about 800,000 household claims. The whole market cannot absorb that. That will be a nightmare. So you should be prepared with technology to counteract that. And then the technology is there. Just grab it, work together, share good practices, learn and develop. Two other large service providers on the repair side of the motor insurance. Axel Nobel, one of our partners, has a full body repair shop across Europe, 1,500 own body repair shop. So we're able to service the customer not only in his home country but also out of Europe. And on the commercial vehicles, it's the TIP trailer organization, which has own workshops in 16 countries in Europe. So you have a full package of services available, and those services are there in the market. I'm finalizing now my presentation. We're talking about challenges ahead of the market, and I said earlier that there will be new entrants coming into to the market. And recently I read an article about the CEO of AIG. He said, my biggest worry is that there are 4 young bright kids somewhere in a garage thinking about a new insurance model will upset my market, and that's my main concern. But I think this could also be a disruptor. And that's Volvo, and like other OEMs. And probably, and I've called them here, I used the word the Trojan horse. They will launch these automated vehicles or semi-automated vehicles. Next year they're going to launch a pilot in London with 100 automatic vehicles being driven by actual clients. And you buy a car insurance, or you buy a Volvo, including a car insurance. So you don't have to go out to an agent or an insurance carrier online. It's all included. So perhaps they are the new competitors in your market, or one of the new competitors in the market. So watch them, because they're another initiative. Tesla is coming with it. General Motors are coming with it, and I think the rest will follow. Well, to leave you with that, if you look at the figures at the moment on the internet, the digital revolution, it's enormous, and it's growing and expanding. Your customers in 2018, so that's 2 years from here, 65% of all your clients will be millennials, 18 years and older. So they don't want to deal with the old traditional way. They want to talk with you through the smartphone, like you're doing now today as well with your stakeholders. So they will do that for sure. So I have a lost because technology doesn't only give new opportunities, but of course has also certain risk. And I'll leave the last video also to look at from a risk perspective side. You can start the last video and then.
Curtains, lights, doors. It even unlocks my car. And the only one with access is me.
Thank you. This is one of the advertisements from a Dutch insurance company, Achmea, which is using this as to inform their clients. Technology is nice, but there are also certain risks attached to it, and be aware of that. Thank you very much for your attention.